Welcome to our video on trading Renko charts and Renko blocks. We're going to introduce what Renkos are, introduce another type of Renko called UniRenko, discuss strategies that you can use to make profit from these charts, and really go into depth on how to make money off Renko charts and Renko bricks. So in this video and in all videos on my channel, we're going to use the E-mini S&P 500 futures product when looking at these type of charts. I prefer trading futures, but you can use these charts through Forex and stock trading, and really anything that you can put a candlestick to, you can put a Renko to. So without further ado, let's get into this video and delve into Renko. First, I want to show you a 30-second candlestick chart. And this candlestick chart, it shows you price action. Each candlestick is based on, in this example, 30 seconds of price movement. When 30 seconds is up, you get a new candlestick. You have your high, low, open and close with your tails, your wicks, and your blocks. So you can see price movement pretty well with this, but there's a lot of noise. You get up and down and up and down and up and down. You can visualize trends, but it might be difficult to stay in the trend, especially when there's real money on the line, because you have an up, you have a down, and you're watching your money fluctuate really quickly. So candlestick charts are good, but Renko charts might be better when you're trading. Visualization of a Renko chart for basically the same timeline. And you can really see there's a big trend upwards, there are trends downwards, and you can see these trends much better than if you were to take a look at your 30-second chart. Let's get into what a Renko is. What is this chart that I'm talking about, and what does it consist of? So Renko charts are composed of bricks that are created at a 45-degree angle to one another, and you can see that in the background chart. They're 45 degrees away from each other. There's no overlap. Consecutive bricks will not occur beside each other, so it's either up or down. A brick can be really any price size. You can do 10 cents, $5, $10, $100. You can visualize both short-term and long-term trends with this, and you can also base it on the average range of the trading session. And Renko charts, similar to tick-based charts, these are data-based charts. They will have a time axis, but the time scale isn't fixed. So depending on the amount of price movement in a period, you'll get more or less bricks in a certain amount of time. And they'll really filter out noise and help you see the trend better, because all movements that are smaller than the box size you have set, all of them are included in the box. So you can't get scared based on tiny movements because you can't see. So this is a 4-tick Renko block. You can see my nifty little scale next to the block. It's 4 ticks. And as I said earlier, we're going to use E-mini S&P 500 futures contracts for these examples. So for the ES, this shows 1 point of price movement or 4 ticks. And then each tick with the ES contract represents a dollar value of $12.50. So this block is worth $50 in price movement, 4 ticks or 1 point. And here's a quick table to show you what this brick actually represents of movement. So let's take a look at these Renko charts. Here's a Renko chart. It shows price movement. As you can see, this is 6 points or 24 ticks, and this is a $300 price movement. And you can see on your time scale, 11:34 to 11:35. It's a very moving day. But you can see 8 points, 32 ticks of price movement. And during this movement, if you were looking on candlestick charts, you would see a fixed time scale, and you would also see a lot of up and down. And you might get scared while this trend is happening, this $400 price movement. If you're trading one lot, a lot of traders will trade 5 lots. You multiply 400 by 5, and you get 2,000 in price movement. But you'll see, take a look. There's less noise. So here is another price movement, and we're back to our And this is an 8-brick Renko chart. So each price, this represents $100 of price movement, or 2. Now, on the left, you have your 4-brick Renko chart, and on the right, you have your 8-brick Renko chart. And this is for basically the same time frame, from 11:30 to around 12 o'clock. And as you can see, your 4-brick has more definition, more resolution. You can see more of the movements happening because you have a smaller degree of measurement. And if you increase your degree of measurement to 8, you remove more noise, and your price movements are bigger. So your trend looks smaller. Now we're going back to taking a look at this chart. And I want to show you, with a Renko chart, you can really visualize support and resistance and trends much easier than you can with a candlestick chart. So here's a support/resistance point, as you can see. And you see that you can identify it because you have 3 bricks bouncing off the same point. And then once again, you have a period of consolidation, and you also have a period of consolidation around 11:39. But you have a period of consolidation around 11:32, which decides to bounce off that consolidation, hit the support/resistance level, and then fall back down. So you can really visualize, look, here's where the market's consolidating. Here's where the market is reaching a period of resistance. If it breaks through, it might be a good idea to go long. If it doesn't and it bounces down, it might be a good idea to go short, especially after consolidation. And you can see this once again through candlestick charts, but it's harder to do so. So now I want to introduce to you a UniRenko, and I find that these are the best method or best chart for trend trading. And with a UniRenko, I'll show you a picture in a few seconds. Your bars will have wicks, and these are similar to candlesticks where you have your high to your open and close and your low, and the wicks will show the high and the low, and when it opens and closes, you will be able to see that in the actual bar. So if a UniRenko bar is set to display 4 ticks, a new bar will form after 4 ticks of movement. However, you have a new parameter where bars will close next to each other, and the distance they close next to each other is configurable. And this is instead of 45 degrees above or below. So you introduce both, the bars are now next to each other, and you introduce wicks. In this example, this is an 8 UniRenko brick, so one brick shows 8 ticks of movement, but now the new parameter, the next brick will close above or below, well, will close in the direction of the trend, 2 ticks. So if you have a red brick and another red brick closes below it, it's a 2-point price movement. And as you can see with this chart, you can visualize trends even better than you can with the UniRenko, and this is basically the same time frame as the other charts I showed you. So if you want to rewind the video and compare the charts or download this presentation, you can do so in the section below. There are a couple links to various. So now here's a trend continuation. You have your brick, which is 8 ticks of movement, and you have it opening and, well, you have it closing 2 ticks below, as long as it's a reversal. We've introduced the wick. So this is 16 ticks of movement because you have an 8-tick price bar, and the wick can be as long as the bar. So 8 plus 8, 16 ticks. Here's a visualization really quick of what this tick bar and wick looks like. You have it moving, pushing up, and when it pushes up above, it pushes the wick above. And when it goes farther down, it goes red and pushes it down. So this is just a really quick representation of what you can see. And you'll be able to see this a lot easier and more in the trade example in the end of this video. So now I want to go over a strategy that you can use when trading Renkos or UniRenko. So first, you want to establish your dynamic support and resistance and fixed support and resistance. 100-day moving average, and we have a pretty good visualization of trends. So this is just one example, but you can really connect the points because these bars they show you price really easy, and they remove time, and they remove a lot of noise that you'll get with candlesticks. So you can really see this is a decreasing trend. It's bouncing off this resistance line, and as soon as it breaks out, you might want to get long, and as soon as it bounces. The first indicator, other than support and resistance, which are the two most important things I think when trading price action ever, the first indicator that we want to use is a 200-day simple moving average. Use this is because we want to trade only in the direction, in this strategy, using UniRenko bricks, only in the direction of a 200-day simple moving average. And this is simply because it increases your probability of being profitable. Typically, if you're trending up, you'll have higher trends going up. And typically, if you're trending down, the inverse will happen. The second indicator we want to use is the MACD, and that's the simplest and probably the most used indicator in the market. Levels and extreme values, you want to start looking to go opposite that. And once you have a crossover, you can take that as a signal, hey, this might be a good time to open or close a position. Also pair that with a relative strength index. When you have an extreme value on the relative strength index, then you want to buy or sell. So for example, if you are below 20, it's buying or selling time, or opening and closing. So when all your conditions are met, when you're in the direction of a 200-day moving average, you have extreme values, you have a reversal, it might be ready to look for your reversal. And once you find your reversal, you might want to wait for around 3 bars is what I'll wait for. 3 bars in the So you want 3 bars in the direction of your trade. And then once you have that, it's ready to get in. And now when you're in a trade, you always have to remember risk management, and risk management will make a winning or a losing trader. Especially with this chart, price movement is big, depending on your size of the bricks, but price movement can be $100 per one brick. So if you're multiple contracts in, you could be down $500 before you know it. And especially with the UniRenko, with your tail, you could have double that movement. So for instance, if your block is $100, your tail is another $100, so that's $200 in movement. So cut your losses short, let your winners run, and then also use semi-automation to remove your emotion from trading. So you want predefined stops and take profit, and also you want dynamic stops. For example, if the price crosses over a 14-day moving average offset by 3 bars, close the position. And in the platform I use, which is NinjaTrader 8, you can automate this. Now, depending on your account size, here are some example stops and take profits. A dynamic stop could be 14-day simple moving average. You offset it by 3 bricks, and it will close as the price crosses it. This allows for minimal consolidation, which sometimes happens. You'll have 2 or 3 bars of consolidation and then a continuation of your trend, but it will protect you from an actual reversal. When you have 4 or more bars going down, you're out immediately. Also, you could do a rigid stop if you don't have automation or you don't have the capability to connect this stop loss to an indicator. And you could just manually increase your stop as the trend increases, or simply close when it reverses color. So if you're long in a Renko and it goes red, you could sell. Your take profit, for me, it's support and resistance levels. So once it hits that level, you might want to sell or sell a few of your position, or when your price slows, and you can see that on the bars on a color change. If you're long and it changes and reverses, you might want to get out, or on a moving average crossing. So also when you're entering a position, you want to have your hard stop of 1.5 to 2 points, and this gives wiggle room if you're early, but if you're against if the trade goes against you, it won't. Now, here's some example moves that you could see when trading UniRenko. This is a really volatile and trending market, so these aren't like traditional moves, but let's take a look. You're in the trade for 2 minutes, you make $775 off one lot. Here's another one. You're in the trade for 3 minutes, you make 600. And you're in the trade for 6 minutes, and you make 12.87. And you see, there's no break. You have a couple wicks, but if you're using a trailing stop, emotion's gone, you're in it until you're out of it. So now let's compare this to candlesticks. Candlesticks have much more noise, and you might get scared, and you might just get out because look at this. I mean, it's obviously trending, but if you're a tiny retail trader trading like 2 lots and you see a big drop like the one that happened at 1047, that's like $300 of your own money and it's gone. So you want to be careful, and removing that visualization and price action from your charts and using the Renko allows you to stay in the trade more because you're psychologically more capable. Now here's a disclaimer. There are big moves, and all of these moves that I just showed you are probably the best case scenario. This is a really quick market. Like you'll make like 4 points of a move in 3-4 minutes. So if you don't have a stop and the thing goes against you and you're not paying attention, you could be down hundreds of dollars when trading one lot. If you're trading multiple, you could be down thousands of dollars in a case of seconds. So you need to have your stop losses in place. Now here's another thing that you can do when trading, which would be increasing your upside and limiting your risk. You could buy when you first see your breakout, and then you can hold as long as your consolidation period, which is the red after the long trend, you could hold that as long as it doesn't go against you by more than 50%. So look, I'll show you what I mean. You buy one lot here, you wait for it to consolidate, you buy another lot here, you wait for it to consolidate, you buy another lot here. Look, you hold one lot all the way, and you hold it until you're out on the main trend reversal. You hold this lot, you hold this lot. You add all these profits up, and they're huge. And there's also no risk as long as you set your break evens and stop losses correctly, because you're using the market's money to open this position and to hedge your downside risk. You already have some money from the first trade working, and as long as the second trade doesn't go against you, and as long as you're confident that it's going to continue to trend up, if you buy back in and buy back in again, there's a lot of upside to be had. Now, of course, here's another disclaimer. This indicators that I mentioned before, the RSI and the MACD and the 200-day, for a longer term trend like this with the consolidation periods, it might not work well. I haven't tested it to its fullest extent. It works when I look at it, but it definitely needs more testing. So if you're going to try any of this, you need to do it in a simulator for at least a month, because these are big moves and these are quick moves, and there's a lot of movement in these bars that is disguised as green or red, but there's still a lot of movement. So you need to be able to, number one, know that your indicators work, and number two, be able to stomach that movement. You might not even want to look at that. So let's take a look. Here's a trade example. Now, let's see if I can play it. There we go. So this is really sped up, but it's about to hit the 200-day moving average. Moving average is moving down, and is about to hit a key resistance and support level. So on 225 at 10 a.m., I'm looking for a downtrend, and we got the downtrend, and we got a increased MACD level, and we got an increased RSI level. So we short 5 lots, and we're in that, and it's profitable. And as long as it's profitable, even though I saw a quick green candle and a bunch of wicks, it's still profitable. And the long-term trend is down, so I'm expecting this to go down, especially after consolidation. And I'm going to discuss this trade in more depth after I'm out. So now I'm out for 12 points, and it's a pretty good trade. The trade continued down, but I got a little worried because the RSI got low, and your MACD hit really low levels as well, so I got out. And let's go over the trade now. First, you have a consolidation period following a major downtrend, and you couldn't see it, but there is a downtrend of maybe 20 points. So that's when you know it's time to calm down. You don't want to get into this choppy market, but you want to be looking for a trend breakout. And usually following consolidation, you'll have a big trend, which is what I got on. Your 200-day simple moving average is trending down, and it's also acting as dynamic resistance. When it hit the 200-day, I knew that it was probably about to go down. Now, this is a previous day low, and lows, highs, opens, and closes of markets are heavy resistance. So this is just something that I was pretty confident that I was going to bounce off of. So you always want to have these indicators. First, we have a MACD crossover, and then we have a wave trend crossover above two. And a wave trend, I didn't introduce it in the previous section, but I like using a wave trend indicator. If you have questions, ask me in the comments below. And then we have an RSI over 70. So that, coupled with your increased MACD, coupled with your consolidation period, coupled with the support and resistance, that's a high probability trade that you're going to make money. So there it is. There's your example. There's your what a Renko is, and I hope you use this video and use this as a stepping stone to start messing around with Renkos, load up Renkos in your trading software. Pretty much all of them have them now. Look up UniRenko if you're looking for the smooth out, really visualization, trend visualization type of bar. And then also if you're on NinjaTrader, which is what I use, take a look at the links in the description. I have linked to several free, the wave trend indicator and a special type of Renko that I used in this video. It's a UniRenko, but it's also provided by a reputable vendor, and it's free. So take a look at all this. I hope this presentation taught you something. I hope you can incorporate Renko trading into your strategy. Make sure that you properly test it out, properly understand the strategy and the indicators if you want to start using real money, and use simulation on it. And I want to stress again, the results you saw in this video are probably the best case scenario. You probably won't see better moves than what I showed you. So it's important to go in expecting that to be the best, but it to be much more choppier and much more difficult than what I just showed you, which is why you need to use a simulator. So if you have any questions or comments, put them in the comment box below. You can also email me. I put an email in this video, and I hope you learned something.